SMCI, the most controversial AI stock right now. Supermicro is the stock that feels like a Hollywood thriller. One scene it's the hero building the future of AI, the next scene it's getting booed off stage by Wall Street. In the last 3 months it's given investors whiplash, getting crushed nearly half off, then dripping higher on January 16. Supermicro is the high-volume server maker powering the new wave of AI factories, think racks and racks of GPUs. Management claims a massive order book, including more than $13 billion tied to NVIDIA Blackwell Ultra systems, and is still guiding toward a $36 billion revenue target for fiscal 2026. That's blistering growth on paper. The news that blew up the stock, and then made it spiky. Okay, picture this, the market was already nervy. Then Goldman Sachs comes in with a formal initiation of coverage and a sell rating, price target $26, citing that SMCI's margins have been halved over the last few years to roughly 9.5%, and that the company could be sacrificing profitability to chase gigantic, low-margin AI contracts. The stock took a hit. On the flip side, Argus slapped a $64 price target on the stock, pointing to the one metric many growth investors worship: massive revenue expansion and order momentum. When one big house whispers, value trap, another screams, run, buy, repeat. The result? A market that cannot make up its mind, perfect theater for volatility. And in the very short term, on January 16, the stock popped, volume spiked and prices closed materially higher as analysts and news feeds duked it out. Was that a capitulation blow, or a short squeeze rally? The jury's still out, but volume shows the fight is real. Why growth fans think SMCI is a sledgehammer to the data center problem. Imagine the AI industry as a gold rush. NVIDIA and the model makers are prospectors, Supermicro sells the shovels, wagons, and water. The company has leaned hard into rack-scale systems, especially liquid-cooled racks designed for ultra-high-power GPUs, Blackwell family. Liquid cooling is increasingly necessary when GPUs push 1,000,1,200 WTDP, air just can't keep up without enormous energy costs. Supermicro claims huge order flow for Blackwell Ultra systems and has been shipping Blackwell-ready racks in volume. Two big practical advantages for data centers. Energy efficiency. Direct liquid cooling can reduce data center power costs by as much as 40% per comparable rack, which matters when hyperscalers are billed by megawatts. By the way, if you are benefiting from the content so far and want more like this, like the video, it means much to me, or hit the subscribe button and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. Density. New 2OU OCP and 4U designs can cram more GPUs per rack, e.g., dozens to greater than 100 GPUs/rack in some designs, which radically increases compute per square foot metrics, vital for AI training farms. Because of that, some investors argue, margins hurt now, but once SMCI scales the factories and manufacturing grooves, economies of scale plus recurring deployment contracts will turn top line into durable profits. And that's where the $36 billion revenue target becomes seductive. Think of a restaurant that's been selling a small, fancy burger at $20 with huge margins. Now imagine they decide to sell millions of inexpensive but extremely reliable assembly line burgers at $5, revenue explodes, but the per burger profit shrinks unless they automate and scale. SMCI is the restaurant going all in on the mass burger plan. If the automated lines work, the math flips massively in their favor. Why the bears, and Goldman, are yelling, margin, margin, margin. Goldman's core concern is simple and structural. SMCI's recent deals appear to be margin dilutive. Goldman's note claimed margins have effectively halved over the past 3 years to around 9.5%, and that large low-margin commitments, done to lock in hyperscaler business, could leave the company with less pricing power than imagined. That raises the specter that revenue growth might not translate to proportional profit growth. Contributors to margin pressure include standardization of server designs, customers demand commodity pricing, supplier costs, RAM and component costs can spike, concentration risk, a handful of large customers can negotiate harsh terms, and heavy capex/engineering spent to solder massive GPU racks together. It's like building the world's biggest theme park by selling tickets at discount to get feet through the turnstiles. You might get lots of visitors, but if you've sold the season passes too cheaply, payroll and rides maintenance eat the profits. The order book, the $2 billion credit line, and the $36 billion promise, are they real? Management has been explicit. Supermicro disclosed an order backlog north of $13 billion for Blackwell Ultra systems and reiterated a $36 billion revenue goal for fiscal 2026. That's a moonshot number, and management says it's backed by booked orders and demand visibility. To execute that expansion, the company arranged a $2 billion revolving credit facility, essentially giving SMCI the financial oxygen to build factories and inventory for mass shipments. That kind of facility matters because raw materials and GPU supply commitments require capital upfront. So yes, they've lined up financing to attempt the build-out. Chart talk, technicals and short-term trade setup. The short-term, hourly frames, show signs of buyer re-entry, rising volume on green days and a few higher lows. If the stock clears the anchored VWAP near the $38 to $39 range, momentum could carry it quickly toward the next supply zone around $53. That's exactly the kind of catapult traders love. Longer term, the stock sits well below its March 2024 highs, $113 pre-split, and has lost around 70% from that peak. Long-term upside requires either improving margins or an unreasonably high multiple on revenue growth. The full-long thesis realistically needs a breakout above the longer-term swing high, $54, and confirmed margin recovery. Until then, rallies can look like squeezes or buy-the-news pops. Trade example, for entertainment/education, not advice if you're a short-term trader. You might buy a small position on a daily close above the $39 VWAP with tight stops under $31. If you're a longer-term investor, you might require a confirmed margin stabilization and evidence the $36 billion revenue plan turns into real, repeatable profits. The margin squeeze, if gross margin sits around 9.5% on $36 billion top line, gross profit is about $3.4 billion. If operating costs and capex rise to support scale, net margins could be single digits for a while, meaning revenue growth won't immediately translate into big EPS gains. That's the Goldman roadmap to $26. Liquid cooling as a multiplier. If DLC reduces power costs by 40% and hyperscalers value that power saving highly, SMCI racks effectively unlock a hidden utility that customers pay for, that can justify premium pricing or longer-term service contracts, which could restore margins over time. Note this as well. Fear God, and give glory to Him, for the hour of His judgment is come, and worship Him that made heaven, and earth, and the sea, and the fountains of waters. Revelation 14 verse 7. I appeal to you to fear God and obey His law. For His commandments are sure and His word everlasting. Do not be afraid, do not be discouraged. Want more information? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, you greatly encourage me to continue bringing to you insightful information. Do not miss out on our future videos full of insight. All I am asking is your subscription. Thanks for joining us today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Wish you God's blessings and care. Wait, watch and pray. See you in the next video according to God's will.